Welcome back. I'm Pratap here. Today is the 22nd August 2024. In this video, let us evaluate the performance of high liquidity zones generated in the previous report. Even before that, an announcement please. If this is your first visit to our channel, please understand we are providing complete free training on supply demand zone price action. All the training videos are available at our NeoStock YouTube channel. So at our channel homepage, please click on this community tab. You get access to this post. This post is having a YouTube playlist link that is having all the training lessons. Just click on the link. Now we are into the playlist supply demand zone price action course. And we have 24 lessons released so far. From these 24 lessons, you have 62 training video lessons are available. So to access from the first lesson, you need to scroll down to the bottom of the page. Here, starting from lesson 1.1, all the training lessons are available in an order. So please go through all these lessons one by one and strengthen your skills related to supply demand zone price action. I have also provided the link to our Telegram channel in this YouTube video description. So from the video description, please join at our Telegram channel. It will be helpful to you each time when we release a new YouTube video or any other important updates we will provide at our Telegram channel. Now let's get into the analysis of the high liquidity zones generated in our yesterday's end of the day report. And this stock was identified yesterday near stocks near the high liquidity supply zone, because this stock is moving between high liquidity daily demand zone and high liquidity daily supply zone. That's why we get trade opportunities on either side. But the stock was listed near the supply zone. Today the stock moved near to the supply zone, and we already fine-tuned this zone till the 5 minutes time frame. I'm not going to fine-tune because I already explained in last 2 or 3 videos. One of the videos in last 2 or 3 analysis videos, I have explained how to fine-tune all these zones in the supply zone. So we already have a fine-tuned 5-minute supply zone, but unfortunately today this zone is stopped out. Okay, we have to accept the stop loss because the once in a while zones will be stopped out. This is a 5-minute zone, and also risk is also very minimal risk. So that is the reason why we got a very minimal loss from this stock. We got 595 rupees loss as per one futures margin, one futures lot. And also it is a negative ROI 0.4%, minus 0.4% negative ROI it has given based on one futures margin cost. So it's a minimal loss for this particular stock, but it is the stopped out. This is the third stopped out trade during this month. So during this month, so far we have 28 trades executed. Out of these 28, only 3 trades are stopped out so far, and remaining all are executed with good profits. And no other stock we got the trade, but closely we missed 2 trades today. One trade we would have got a good profit, but we didn't take because RR is not enough. Because RR is not enough, we rejected the trade. Otherwise, we would have got a profit. But anyway, I will explain those scenarios. One is Biocon. Biocon, we missed the trade. See, this is the fine-tuned zone. Price came. It reached even 15 minutes target trade. Still, we didn't take the trade. Why we didn't take? I will explain. First of all, Biocon is a 75 minutes high liquidity supply zone. This is the rally, 2 base candles and a drop candle and follow through candles. This is the high liquidity zone identified by our software system, and this 75 minute zone is fine tuned with a 15 minutes time frame. So we have a ERC candle, we have a base candle and drop, leg out. It's not very great leg out, but okay, fine. Leg out and follow through candles. Drop 2 base candles, not 1 base candle, 2 base candles and a drop candle. This is the 15-minute zone. Inside we fine-tuned with 5 minutes time frame. ERC candle is the leg-in. We have 2 base candles and a drop candle. And the 5 minutes time frame, we identified a 5-minute zone here. So we are at that 5 minutes zone. So we have a drop candle, we have 1, 2, 3, 4 base candles, and again a drop candle. And see the rejection, huge rejection from this zone. That is indicating a strong order flow in this zone. That is what we experienced even today also. Sorry. Okay. Oh, okay. See, today prices came almost close to the fine-tuned zone. Just few paisa buffer you would have added, your trade would have been executed, and also it reached the target. But you are not having a 1:1 RR, 1:3 minimum RR is not available. If you are an experienced person, at least 1:2.5 you would have accepted. Still that was not there. Let me show you. If you want to achieve 1:3 RR, you would have taken a trade here. Let me draw a horizontal line to get the clarity. So at this blue color line, you would have taken a trade if you want to get 1:3 RR. But today prices didn't reach up to this blue color line area. See, previously, yesterday and previous days reports, we did such kind of technique. At the time prices reached till this price adjustment area. And we got the trade. And after that reached the 1:3 RR. That way we got successful trade. But today the same scenario is failed to reach the blue color line area. Because it reaches the blue color line area, then only we get 1:3 RR. If we want to take a trade a little below this, or by adding some entry buffer, see, let me adjust the entry. Suppose if you would have taken a trade here, let me draw a blue color line. By adding some entry buffer, if you would have taken, your trade would have been executed, and also prices would have reached this. This is the 15 minutes target area. Let me show you 15 minutes time frame. See, here we have a rally, base, rally. So this is the 15 minutes target. So your trade would have been executed. It reached the 15 minutes target. You would have got the profit. But why we rejected this? Because when you want to take a trade at this entry buffer area, you are getting only 1:1.65 RR. Accepting the trade 1:1.65 is not a valid trade, a valid RR. That is risk reward. So this is the reason why we need to, our objective is to achieve at least 1:3 RR. That is the reason why what I am trying to do using the short position, because previous video also explained. Here we have a short position. I already said that short position, and then I started moving the prices up. The moment I am moving, RR is also increasing, and by the time the top blue color line it reaches, see here, it achieved 1:3 RR. Let me delete the blue color line below. So if the prices reaches till this blue color line, then only we accept the trade. Otherwise, we don't accept the trade because we are not achieving the RR. See, today what happened? Prices failed to reach this blue color line. That's why we missed the trade. But after that, prices moved down and finally reached the 15 minutes target. Because RR is not sufficient, you missed a trade, a successful trade, you missed it. But we can't take a trade like this. You can't take with less RR. If you miss the trade, you have to accept. Anyway, it is not giving you good RR, expected RR. So this is the reason why how much profit you might have missed because RR is not sufficient. At least let us calculate what is the opportunity we missed. because RR is not sufficient. Anyway, you can't take the trade, RR is not sufficient. But otherwise, if suppose till this area, with the entry buffer, small entry buffer, if you would have taken a trade at what price? At 359 rupees. At 359 rupees, you would have taken a trade. So 359 minus, what is the target? This is a rally base rally here, the close of this candle, 356.40 paisa. 356.40 paisa. That equals to 2 rupees 60 paisa profit you would have got. So margin, zero the margin calculator. Biocon, August futures, lot size is 2500, but your margin cost is 2,43,000. You would have got 6,500 rupees profit into 100 divided by this margin. Probably by the time prices reached here, from the maybe another 500 rupees additional margin would have been there. Maybe we can say approximately 2,043,500 rupees could have been your margin cost at the time of the entry. Approximately I am calculating. So divided by 2,43,500 rupees. You would have got 6.66. That means 2.7%. 2.669. That means 2.7% ROI you would have got. Why we didn't take? Because there is no sufficient RR. If you would have taken, your RR would have been only 1:1.8 or 1.7. If it is stopped out, you would have got a more loss, because RR you are not following the RR. So that's why, to avoid the additional risk and to avoid the additional loss in case if our analysis fails, that is the reason why we are strictly maintaining a minimum 1:3 RR trade. And we got such kind of trades, successful trades in the previous days. Today we missed it. This is the point. This is a good learning for you people. Sometimes you will be missing because RR is not there. Anyway, you don't take the trade. But you trade for your luck, at least whether prices reach near this blue color line, but slightly below, prices against reversed against the earlier price direction. That's why we missed the trade. Anyway, this is about Biocon. Exactly the same way we missed one more trade, HDFC Life. HDFC Life is also a 75 minutes high liquidity demand zone. We have a rally, 3 base candles and a rally candle. This is what our software identified. And this I fine tuned with 15 minutes time frame, this 75 minute zone. I have identified 2 zones, rally base rally, and another one is rally base rally, 15 minute zones, rally base rally, and this is rally base rally. This is again I fine tuned with 5 minutes time frame. So here in the below you have a rally base rally, again prices came down, once again it created drop, 4 base candles rally from this area. That means it could be high liquidity, but because of this drop base rally, one more trade is enabled in this area. We don't know it is high liquidity or not, because LOTL scenario, drop base rally. But from where it picked up the order, this is the origin, rally base rally. That's why in this area we give priority to take the trade. Next time you can plan one more trade in this area, even though it is tested earlier. But this one is a clean, perfect one. We have a rally, we have a base candle, 2 medium sized candles also part of the base, and a rally candle. This is the 5 minute zone we have drawn. And this is the 15 minutes target. See here you have a drop candle, 2 base candles and a drop candle. And today prices reached into this area. Came very close to this area. Let me go to the 5 minutes time frame. But the problem is you can't add entry buffer. The reason is exactly in this 15 minutes entry level we added the buffer. Then you are getting 1:3 RR. See here 1:3.05. That means 1:3 RR we are achieving till this 15 minutes target zone. Adding additional buffer is not possible. If you add, you will be missing the RR. Even though RR is not there, even if you add 0.1% additional buffer from this 5 minutes entry, still you will be missing the entry here. Because in this area probably order flow is very strong. Maybe next time when it retraces, at the time you can plan a trade. But today narrowly, even after adding entry buffer 0.1 entry buffer, still you will be missing a trade with 45 paisa. Because the prices has to fall down by another 45 paisa from the low of this candle. Then you would have got the trade by adding entry buffer. But if you add the entry buffer, you won't get 1:3 RR. That's why you have to let the prices to get into this area. That means almost 1 rupee additional price it should, if it was fallen down, then you would have got a trade. But today it's unlucky. The prices reversed just before this fine-tuned area and then started moving up. But it gave a good profit. It even violated this 15-minute zone, further moved up. But anyway, we have to accept. The reason is we didn't get a sufficient, because risk management is not allowed us to took a trade in this stock. That's why we missed two important zones, two important trades, Biocon and HDFC Life, not having enough entry buffer here. Here we got an entry buffer Biocon, but still we didn't take. The reason is RR is not there. It is short of 1:3 RR. The moment we adjusted the RR, prices didn't reach up to the adjusted area. Yesterday and day before area, till the adjusted area, prices reached. That's why we got that successful trade yesterday. Today, for Biocon, prices did not reach till the adjusted area. This blue color line is the adjusted area. So prices didn't reach till the blue color adjusted area. If it would have reached, we would have got 1:3 RR. And also trade would have been a successful trade. Anyway, we have to accept. There should not be any disappointment. Always remember, if you don't get successful trade on a particular day, don't get disappointed. You will get opportunities in the next coming days. So we have 21 or 22 trading days are there in a month. Out of 21 or 22, at least 17 to 18 trading days we are getting successful trades. Hardly 4 or 5 days you may not be getting successful, or maybe 5 or 6 days you may not be getting successful trade. Remaining days we are getting successful trades. That itself is a good profit for us. That point you have to understand. But if you are always thinking trade by trade, you will get dissatisfaction. When you get dissatisfaction, your mood won't be good, and you will make mistakes when you are doing analysis for the next day's trades. That's why psychology is very important, human psychology. We have to be very strong. If you don't get a successful trade any day, just leave it. Ignore it. Just relax for some time. Don't think of the trades. That day we didn't get good opportunities. That's it. Okay, and the last stock is the Emphasis. Emphasis, anyway, I didn't fine tune up to 5 minute zone because it is the zone created in the year 2022, March 2022. So that is the reason why we didn't have 5 minutes data. When there is no 5 minutes data, you can't identify the order flow. When you can't identify the order flow, There is no guarantee that whether the zone will give a trade or it will be violated. See today, the zone is violated. Not complete zone, but the fine-tuned 75-minute zone is violated easily. Because 5 minutes order flow is not confirmed inside the zone. So this is the reason why this, I didn't really worry about this particular trade. Data is not there in the trading view, because the trading view 5 minutes data is available only for last 1 year. So except that, these are the remaining things what we already fine-tuned. And finally today, the conclusion is today only one trade is executed today, ICICI, and that one trade is stopped out. We have to accept, but the stop loss is very, very minimal. Just only 595 rupees. So this is about the analysis of the high liquidity zones we identified. Hope this information will be useful to you. Let's all meet again in our next video. Thank you.